All right, hello everyone. Tim Davis coming to you guys with another market review. Today is Saturday, June the 10th, 2023. It's about 7 a.m. Eastern Standard Time. And I want to start off by going over what to expect in markets next week. And guys who are not familiar with Investopedia, it's a great resource for traders and investors. If you want to learn about anything dealing with investing or the stock market. But wanted to show you guys what to expect in markets next week, because next week is probably going to be a lot of volatility and there's a lot of market moving events. So let's get right into it. So of course we know the Fed meeting is next week, so that's definitely a market moving event. Also, the Labor Department will release its latest figures on the consumer prices on Tuesday. Producer prices PPI set to follow on Wednesday. Again, the Federal Reserve will kick off its two-day policy meeting on Tuesday with the commentary or the Fed conference on Fed post conference the following day on Wednesday. Fed press conference on Wednesday. There's going to be a lot of data coming out next week. There's a lot of information that's going to be market moving next week. We also get retail sales on next week, consumer sentiment also by the end of next week. And we got some major companies that are also reporting earnings next week: Oracle, Adobe, Kroger, Lennar, just to name a few. So next week is going to be power packed. And also there's triple witching, and I'll show you guys what triple witching is. Well, next Friday is triple witching. And I'll show you guys what that is here in a second. Who doesn't understand what triple witching is, but next week is going to be a lot of information that's going to be flooded into the atmosphere. That's probably going to be market moving. So prepare yourself for a lot of volatility on next week. So just in a nutshell, on Monday, you got Oracle reporting, which is the major one I'm paying close attention to. On Tuesday, you got CPI data coming out. Wednesday, you got PPI data coming out, and the Fed rate decision, along with the Fed press conference, which is normally at 2:30. Then following that on Thursday, you got retail sales data coming out. You got Adobe reporting earnings, Kroger, Lennar. Then on Friday, triple witching. And consumer sentiment index, that's something to pay close attention to. For those who are curious about what triple witching is this simultaneous expiration of stock options, stock index futures, and stock index option contracts, all on the same day. This only happens like 4 times throughout the year, folks. So that is also something to pay close attention to, because it also can be a lot of volatility throughout the day, and especially towards the end of the day, as our investors and traders look to balance their book sheets, balance their portfolios. Yeah, so next week is going to be a very, very interesting week, folks. So batten down the hatches and just be prepared for a huge week of data that's going to be popping out. It's definitely probably going to be market moving. Now, let's dive right into the charts and see what the charts are showing us ahead of all this data that's going to be dumped out next week. So we're going to start by looking at the SPXA 200R. Of course, you guys know the sentiment tool I checked to see what the S&P is showing us. And I told you guys to pay close attention to this to see what the overall sentiment is. And right now we are still now the highest you can get on this tool, again, as I said, is 100%. And the markets have been up and down, for the past year or so. And since October, the market there's been a lot of stocks that have been, well, not a lot, I should say, a select few that has been doing very well over the past several months. But because it's not a huge broad participation, what I'm saying, our market is still stuck between a range. So I pay close attention to this tool because this tool also shows us what the overall sentiment of the market is. And right now, as of the close on Friday, it's back above 50%, which means about 50% of our stocks above the 200-day moving average, 50% are still below the 200-day moving average. And this tool right now, if you look closely, if I was to draw a trend line, it is in a downward trend in motion. So every time it rallies back up to this point, it is pulled back, and we're right back up to this point at a decision point with a lot of data that's about to be dumped next week. So that should just give you signs of caution as we head into next week. With a lot of data about to be dumped, we are at a crossroads as far as it relates to technical analysis. So just keep that in mind, folks. If you look at this RSI here on this daily chart, we are in overbought territory in RSI, heading into a week where there's going to be a lot of data dump. So could we start to pull back here? That is a huge possibility. And if we pull back here, same will follow in our S&P index and more like the other indexes as well. So again, we are at an area of resistance in this particular tool, right at a decision point with the RSI in overbought conditions on a daily chart. If I switch to a weekly chart, you also see how the RSI is pretty much been trending downward. The RSI has pretty much been in a downward trend, and so has the percentage action on by looking at the candlesticks. And in a downward trend, and here is the ultimate bottom of this range that is currently be trading in, and we're in this tight window. So next week we could see it falter and go lower. So we got to see how this pans out. But again, we're only about 50% of stocks trading above the 200-day moving average and 50% below. With the technical setup looking like we could be heading starting to trend downward as we travel through next week. So again, it's been a lot of volatility next week. So batten down the hatches and be prepared for all the data dump that's going to happen on next week. If we switch real quick, look at the S&P on this weekly chart, again, at a critical juncture with a lot of data about to be dumped. RSI of the S&P is in overbought conditions, right at a level of resistance, a level that we haven't seen since August of last year. And the last time we hit this level, we pulled back. Do we get the same thing here now? We have to wait and see. But with all the data that's about to be dumped on next week, we could see a lot of volatility. So that could be enough to stop the S&P in its tracks right at this level of resistance in this overbought condition. Could be enough to send the index lower. So we have to see what happens on next week. With the S&P in overbought conditions, heading into a data dump week, look at the VIX, and it's in oversold state. Look at the VIX closely on this daily chart. You see RSI definitely in oversold state, and we're right at a level of support, or hanging around a level of support right around that 15, just below $15 level, between that 13 and $15 level. Is this a place for a bid for the VIX? It is a huge possibility that we could finally see a bid for the VIX. And again, the VIX has been trading strangely. So, and every time it runs up into areas of resistance, it has seen pullback. So we could get a pop in the VIX next week if we have a lot of volatility, and the first level of resistance would be right around 1750 or around 18. So pay close attention to that as we trade through next week. Let's take a closer look at the VIX too, because I haven't looked at this yet. Here's a 4-hour chart of the VIX. And you can see how deeply oversold it is on a 4-hour chart. Deeply oversold on the VIX, heading into a data dump week. So the way the technicals and everything is set up right now, it is set up to see a VIX spike and a market retraction. So keep that in mind, folks. Though I wouldn't go all bullish on next week, because the way things are set up is set up to see a VIX spike and a market reversal, with the markets being in overbought condition and this VIX being deeply oversold. I mean, this is the lowest the VIX has been in a very long time, so I would definitely be very cautious heading this next week and be prepared for a possible pullback in overall markets with a lot of data dump again. Can't stress that enough. All right. So that is a look at the VIX and a look at the SPXA and the S&P. Let's take a quick glance at the Dow Jones. Again, the Dow Jones 4-hour chart is also in overbought conditions. Got very, very close to the high in May, but didn't quite make it up there. Signs of a reversal. Looking at the candlesticks, RSI overbought conditions. That's just on a 4-hour chart. Now, if we switch to a daily chart, getting very, very close, right around a level of resistance with several green candles in a row, folks. That's normally considered that's a still green light. Got multiple up days in a row. And I didn't even put that out on the VIX too, folks. If I was to go back to a VIX daily chart, it's also something to always be mindful of when you have so many red days in a row. Look at this. This is the VIX. So that really leads me to believe that we can be in store for a big reversal in the VIX come next week, because this is definitely called a stale red light when you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red days in a row. Heading into a week where a lot of data dump. Folks, I do expect this VIX will find a way to bounce next week. All right, so back to, again, so it shows you where the Dow Jones is. Let's take a look at the NASDAQ real quick. NASDAQ also in overbought conditions, and it's been trying its best to keep its head above water, but it's just got up to this level and just been stalling out around here. So since we got up to this around this level, this is the range we've been in for the past several days. So since about the end of May to where we are now, we've just been in this range that I just circled. Look at this daily chart. We've been stuck in this range. So, and with the RSI starting to falter, look at the RSI starting to falter on this daily chart. So again, at a critical juncture where a lot of data is about to be dumped, that doesn't fare well for our markets to be in such an overbought state heading into a big data dump week. Here is the weekly chart of the NASDAQ. And as you can see, definitely in nosebleed territory, right at a level of resistance, a strong level of resistance, folks. Keep that in mind. The NASDAQ has been on a tear. So would not surprise me to see some type of correction in the NASDAQ, probably more so than others. Look at the RSI on the NASDAQ, 82 on this weekly chart. It is an extreme overbought territory. Right at a level, strong level of resistance that we saw back in around August, between July, August of last year. And we see what happened when we hit that level. We got a strong pullback. Do we see the same here? We have to wait and see, but all signs point to a possible pullback heading into a huge data dump week. That is the NASDAQ, so just be mindful and be careful as we head into next week. And let's take a look at the Russell. Russell has been trying to catch up with other markets, but it is still, believe it or not, even with all the movement we've seen in the Russell here lately, this is pretty much the range that the Russell has been in since last year. So up and down from the lowest point to the highest point, lowest point, trying to make it back up to the highest point. I don't think we're gonna make it back to the highest point yet, but this is the long-term range that Russell has just been trading in. You know, anywhere between 1,700 all the way up to about close to 1,900. And right now we're right back at a level of resistance. Back at a level of resistance, looking at this this weekly chart, right at the level of resistance. So where do we go from here? Probably going to follow the rest of the markets. Even though it looks like the weekly chart here, it's like it could go a little bit higher. However, if you look at a daily chart, we are right at a level of resistance. Right at this level of resistance with signs of a reversal already starting to show. Signs of reversal in RSI starting to show. Look at this strong area right here where we're seeing indecision and changes. So anytime we got to this level, we've seen some type of indecision. We've seen indecision here before going higher. We've seen indecision here before going lower. So that is a strong level of resistance. All right, folks, I think that's all I have to show you guys. I want to just be very basic this week and show you guys where we what the markets are showing us. True, we've had some nice rallies in this market over this past week, but I think it's time to batten down the hatches and not go all in this week because there's a lot of data dump and we are at levels that we can definitely see reversals in the markets. We have all signs pointing to a possible reversal in the markets. If we look at some of the stocks that report earnings next week, like Adobe reporting earnings next week with this shooting star. Look how it gapped up already right before earnings. Big gap there. Gap up already, heading into a data dump week. So I don't care. It could be good news, bad news. It's setting up. Where it's set up now. If it doesn't get a big pop and hold it, it's more than likely set up for reversal. That's Adobe. You look at a home builder like Lennar. Lennar is up at right around a level of resistance because if I was to draw this out a longer every time we got around this 117 level, Lennar has found a way to pull back. We hit that 117 level back in December of 2022, and we see what happened. Lennar pulled back. March right back up to this level. And we look at these candlesticks here. See, we're starting to peter out. And look at the RSI. So unless Lennar get a huge breakout to the upside, even if it does do that, I would expect a check back. All right, folks. So hopefully this is enough to get you prepared for what we can expect on next week. Again, we're still not, believe it or not, folks, we are still not out of this bear market. Let's look at a longer term chart of the S&P. Trying to claw our way out of this bear market, but still got a little ways to go. A lot of folks say we're 20% off the bottom. I look to see where we can ultimately retrace our movement back up to the ultimate high or all-time high, which was back in the end of 2022. That was trying to $4,800 level. So we got still a little ways to go. Pressing up against some areas of resistance. So if we get a falter here, it's going to take us some. It's going to take the market some momentum to build back up in order to come back up to retest that $4,300 level. If we look at something like our Russell on a monthly chart, Russell definitely is trying his best to get out of this funk. So that'll be the first one. I'll be paying close attention to Russell. If the Russell can find a way to really break above 1900 and head towards 2000 in a big way, then it may be positive action for overall markets. But I don't think it's going to happen in the near term with a lot of uncertainty heading into next week. And if we look at the NASDAQ on a monthly chart, it has been the strongest of the bunch. But there's possible signs of reversal, right? As NASDAQ is actually still at a level of resistance, even on a monthly chart. So there are signs of caution, signs of reasons to be cautious right now. It's such a major run since October of last year. And the Dow Jones has just been stuck. It's just really been stuck, folks. It's really been doing a whole bunch of nothing. Believe it or not, it's in this very tight range since October of last year. And it's really been struggling to get above this ultimate level of resistance right around this 34,000, 34,230. It's been struggling to get above that level. So and it could be about to falter here heading into next week. So, all right, folks, that is a look at the overall markets, a look at what we can expect on next week. A look at the VIX and a look at the SPXA 200R. So again, be mindful, be careful, and batten down the hatches because I do expect to see a lot of volatility next week with so much data coming out. Again, end the next week on Friday, we have consumer sentiment coming out, and as well as a triple witching day. And again, if you don't know what triple witching is, go back and look it up in Investopedia, and it will explain it all to you. We have multiple options explorations in the same day. Only happens 4 times a year. All right, folks, I'll catch you guys in the next video.